Investec came out with a note on the NBFC space post the budget. It believes that it had no action plan to rescue stressed NBFCs and real estate companies. Let's discuss this in greater detail with Nidesh Jain, research analyst at Investec Capital Services. Hi Nidesh, good afternoon, and thanks a lot for joining us today. Tell us your major takeaways from the budget with regard to the announcement made for the NBFC space.
Thanks a lot. Thanks for having me on your television. So, couple of things. Firstly, I think this is the first time in budget where Finance Minister mentioned NBFC as a word maximum number of times. I have not seen mention of NBFC so much time in any budget in last 7-8 years. So they definitely understand issues in the NBFC sector. Having said that, the announcement that they have made, I think largely they were optical in nature. They were clearly not in a position or not willing to rescue any of the NBFC which are under stress. So which in my view is also a right strategy. I think some of the NBFCs which are under stress for right reasons, and the government should not come out and rescue these NBFCs. It will create a moral hazard. Though there will be volatility in the short term, I think that's the right approach towards that. And they clearly articulated, and the steps that they have taken are likely to favor the stronger NBFCs. So some of the steps like providing credit enhancement, providing credit guarantee is likely to benefit only the large and strong NBFCs. So I think that the budget is pretty in the right direction, but there is no action plan to rescue any of the troubled NBFCs, and which will have volatility in the short term, but it's positive for the long-term perspective.
Nidesh, you did mention that the better quality NBFCs could gain out of this, and whatever is happening in the NBFC space, of course, owing to that, the liquidity crisis, the competition will shrink, which would also mean market share for good quality NBFCs would move higher. In light of that, which are those NBFCs where Investec is currently bullish on?
So we are fairly bullish on Cholamandalam Investment Finance Company, CIFC. They are operating in two segments, vehicle finance and home equity, which is also called as LAP. And in both of these segments, they have witnessed substantial reduction in competitive intensity. We have done channel checks on different parts of India, and we have found that they are gaining market share in both vehicle finance as well as in home equity. In home equity, large housing finance companies, the likes of Diwan and India Bulls, are facing liquidity issues. Because of that, Chola is gaining market share there, and they are able to command their own terms, both on the risk side as well as on the pricing front. Similarly, on the vehicle finance side, some of the NBFCs are not disbursing as much as they were disbursing earlier, primarily on the used CV side, on two-wheeler side, and there again, Chola is gaining market share. So despite a very weak vehicle sales growth, I believe the company is expected to grow at 20% plus even in the current quarter, and which will be one of the strongest performance in the NBFC sector. So that is our preferred pick. Among housing finance companies, we believe budget was very positive for affordable housing finance companies, the companies which are operating at the lower end of ticket size. Given there is an additional tax incentive for loans up to for purchasing of house up to 45 lakh category. And there we are very bullish on Canfin Home Finance, which is likely to benefit the most from that step in the budget. A large part of their book is operating in affordable housing finance segment. Their average ticket size of loan is 18 lakh. They have no exposure to developer. So these are the two NBFCs that we are bullish on in the current environment.
Okay. Nidesh, no mention of the gold finance companies. Any thoughts on Muthoot and Manappuram, which have actually weathered the storm quite well since the time liquidity crisis started in September last year? We've seen good returns from both of them, considering the shorter term tenure loans that they've been offering, and also the collateral value is moving higher because of higher gold prices now.
Yeah. So from short-term perspective, these two companies look pretty interesting, primarily because the gold price have been inching up, and has inched up in last 1 year. if you look at last 4-5 years, they have been struggling primarily on the growth front. After the RBI guidelines on LTV of gold loans, these companies were struggling on the growth front. And this year, specifically, given the gold price has moved upwards, there are expectations that they will be able to grow at a faster pace. Given the short tenure of the book, there was no ALM mismatch on their balance sheet, and they were not facing liquidity issues. Lenders were happy to finance these two companies. But I think from a longer term perspective, the large part of growth as well as capital allocation has to come from the new businesses that they are entering into. For example, Manappuram has entered into microfinance, home finance, vehicle finance. And there, as of now, we are not very positive on these companies' ability to enter into these new segments and create a strong, viable business model out of that. So we are actually in process of doing work on more on these companies, and as of now, we don't have any firm view on both of these companies.